Very good morning to you and welcome to Metropole TV, a Fast in Africa business channel across East and Central Africa that brings you up to speed on what's trending on the business front. And welcome to Business AM, your breakfast show that brings you up to speed on matters happening on the front scene on Kenya's business front. And now, welcome to Sector Trends, where we look or take a look at diverse business trends or sectors in our economy. And today, joining me is Mr. Eric Mboma, Group Director of Subsidiaries from AGF. But let's first go through this, where amid the economic uncertainties in the country, Africa Guarantee Fund has unveiled COVID-19 Guarantee Facility, which is aimed at reducing financial uncertainties resulting from the pandemic. This is amid commercial solutions over and above the regulatory efforts already provided by the various central banks and governments in the continent. And to discuss this, Mr. Eric, a very good morning to you.
Good morning, Tabitha. I'm very well, thank you.
Okay, great to have you. Now, we have that AGF have unveiled a facility to curb the pandemic. But let's first understand how a credit guarantee scheme works.
So essentially, our mechanism is a credit enhancement tool. So essentially what we do is to support the financial services to actually be able to lend and support the private sector, and more specifically the SMEs in the country and obviously on the continent.
What informed you to create a COVID-19 guarantee facility, and how big is it?
I guess if you look at the vision and the mission of our organization, it is centered around the growth of the SME sectors in Africa. Our shareholders basically came together almost a decade ago with the objective of supporting the economy and making sure that the SMEs in Africa actually are part of the game and contributing to growth and basically fighting unemployment on the continent. We are living unprecedented times. We obviously have been through many other crises in the past, but when the COVID-19 pandemic became part of our everyday life, it was I would say basically like a minimum requirement for us, a normal calling to be part of the conversation and take responsibility of what our organization can actually add to the industry. This facility is aimed at supporting the economy with roughly $1.5 billion of credit to the economy. So that's basically doubling what we have done in almost a decade. So the objective for us, maybe to sort of enrich what I just said, is to basically be able to support the companies and the economy in two ways. Phase one is going to be stabilizing the economy. So basically between now and the next 6 to 12 months, we should be supporting the economy by making sure that existing facilities in the system are being sort of protected against the consequences of the COVID-19. We should then have a second phase, which is going to be more of a growth phase, which is to actually help the economy sort of get back into that mode of growing again and investing in the future of the companies that we support through the financial institutions.
Okay, looking at your first and the second phase, what can we say are the top perceived risks among MSMEs that the AGF product is looking into mitigating, especially not during the pandemic?
I would say that the pandemic is actually bringing, in terms of change in the context in which companies evolve, it is, I would say, sort of creating some kind of a zoom in a way, focusing on all the usual weaknesses that we see, but sort of inflating them. So it means that you have a couple of risks that are still going to be in the picture that we need to support. Obviously, a credit risk of companies involved in the activity. You're going to have such things as skills issues, having the right people around the table to manage and support the facilities in the organization. You're going to have other issues pertaining, for instance, to the lack of information. Those are the three first that I'm coming up with, but really, we're talking about the same existing risk that you already have found with the SMEs in the environment in which we evolve, but which are just going to be put at the forefront once again.
Yeah, and looking at the preparedness that maybe we have in place, how well prepared can we say is this fund to deal with the realities of the COVID-19 pandemic, judging from providing for non-performing sections from your current fund? How well prepared are you?
We know our business. We know the financial institutions that have been in touch with us, and we've covered 150 of them on the continent over the last decade. So we know how they behave. We know our SMEs. We know the needs of the SMEs in the African economies in general. So I would say that from that perspective, we know what we're dealing with. This being said, the situation, as we have all commented on, and it has been discussed with you many times before actually I come here, these are unprecedented times. What it essentially means is that we need to show flexibility. One example would be that in normal circumstances, we might not, if let's say a company is sort of unable because of the general context to meet their obligations vis-a-vis the financial institutions, we should show more patience than we would otherwise. So I would say that we're going to come with our facilities with more flexibility than we would otherwise. We will be allowing the financial institutions to make more decisions freely from us so that they can react faster. But we will just make sure that our teams, after the facts, are much closer to those financial institutions in order to make sure that the risk taken is the right kind of risk.
And looking at the facility, is it an expression of confidence that there will be maybe a quick turnaround after the COVID-19 pandemic, or is it an expression of continued effort in funding African businesses?
I would say that we have those two in mind at the moment, and I would say your second assertion comes immediately to me, which is we do believe in African SMEs. African SMEs are way below the potential that they have in terms of delivering to the general economy. In many countries in Africa, you're going to see that the contribution of to the GDP might be around 20 to 30%, when it is almost at least twice and more in the more mature economies. So we definitely have this desire to keep supporting African economies, but we also want to step to the plate and play the role that we're supposed to be playing in this economy.
Okay, now you've mentioned mature economies, and now looking at the banking industry, especially in Kenya, which is deemed to be highly regulated, with banks operating within a framework that highly provisions for non-performing facilities. How will the COVID-19 facility support the existing banking industry regulatory framework?
Absolutely. Thank you for the question. What I would say is that the central bank, be it in Kenya, but obviously as well in other countries on the continent, from a regulatory standpoint and even government in terms of stimulus, from a legal standpoint, have brought direct contribution to sort of mitigating the impact of COVID-19. But those are things that have been done in the past by responsible governments. But the private sector as well need to be supported, and that's where we step in. We believe that we should be playing our role. Banks have a critical role to play. The private sector should keep operating at the best of its capability. But it's important that we bring in this conversation the sort of value add of a guarantee fund in terms of credit enhancements and in terms of basically curbing and reestablishing trust. Because in the end, the economy and more specifically funding to the economy is a matter of trust.
Okay, yeah.
The other point I could add is in a context like this, be it on the supply or the demand side, you have, I would say, negative factors that are going to create an increase in the cost of credit. So it is crucial that at a time like this, what should be a roadblock to actually, to the capital inflow in the economy be put aside, so that strictly the economic fundamentals of the companies, the SMEs seeking support are considered instead of the general context that COVID-19 is unfortunately bringing on us.
Okay, now looking at one of the measures, which is lowering the CBR to just 7% and cash reserve ratio to 4.25%, do you feel that whatever our government is doing through the Central Bank of Kenya is enough to cushion SMEs from the effects of the pandemic? And now you coming into play. How do you feel our government has handled this situation? Is this enough to cushion SMEs from the effects of the pandemic?
I think it is critical, but I think that the next couple of months, especially when we start alleviating even further the sort of lockdown on the economy, when companies are now back into business and able to make the critical decisions in terms of which investments are a priority at this point in time and where they should be investing the money, the capital cost conversation is then going to come and let us basically realize if the measure taken were sufficient or not. But I think that being careful and cautious in this process is also making sure that we have all the tools available on the table to support what the government has done. I think they have made some good moves, but the litmus test of their efficiency, being Kenya and other economies, will be faced in hopefully in the next few weeks if the decision to really alleviate the lockdown is taken and implemented.
How can we say, looking at the following weeks and how the government maybe can work, how can we say you guys from your end are working? What areas or SMEs in the country, in Kenya, not Africa, in Kenya, are you targeting, and how are you doing that?
Look, at this point, you have so many sectors affected, and all of them are contributing. This being said, attractive to the banks. Kenya is known for selling roses, flowers throughout the sector that I would want immediately, because there is already a proven business model in all of areas and be a problem too long. Look, we looked at many sectors recently, and you have sectors that are going to probably be much faster than others. Basic needs related to our consumption on a daily basis will be at the forefront of what we do. If you look at the banks right now, banks are doing quite well, relatively well, I would say, and everybody else. We provide facilities to support banks, and we'll be supporting them as well. We will also be looking into areas that in the logistics and transport, among others. We're sector agnostic. That's really the most important. We heavily rely on the choice and decision to actually those industries.
Okay, Eric. So probably what can we say is the cost of lending MSMEs be lowered? How can the cost, rather, of lending MSMEs be lowered during this period when they need the money the most to jumpstart their businesses? What's your take on that?
I would say that given the context of going to be high, and this is the very we bring to the table is I was talking about credit enhancement at the beginning of this conversation. Some banks will be inquiring from their clients to sort of bring the securities that they need for them to actually be in a position to provide them with the needed facility. So we will be curbing this based on our guarantees by just providing the guarantee to the right kind of institutions and clients. But the second thing that we do is obviously making sure that capacity development is in the organization. From that perspective, what we mean as well is that we need to make sure that companies are being able to adapt to this new normal. It also means, for instance, the small restaurant at the end of the street, which used to receive its clients directly on site, will now have to maybe think of new business development models and maybe be selling online, something that they wouldn't do before. So technology, use of technology, internet, selling and leveraging existing sort of devices, applications, and so on. Our role is not just financial, it is managerial, it is marketing, it is business development as well. All the tools possible and platforms that can help improve and facilitate business will be part of the conversation from our perspective. So we provide grants in that space as well to make sure it is effectively.
Unlocking the potential of most SMEs in the continent. How do we interpret your AA rating by Fitch?
Well, I think this has been a regular good news for our organization. It is a first for an African government.
Okay, Eric.
Beyond the satisfaction of market condition, the second element would also be that when a financial institution is dealing with us, they want to have the comfort of being able to be paid and supported in case something goes wrong, and to be paid and supported fast. That's exactly what we do, and that's what the market has been sanctioning with Fitch most recently, and we'll be continuing on that path.
Okay, so maybe anything else probably you'd like to add, looking at the facility that you're offering and how you are going to handle it in Kenya and also Africa as a whole?
I think this is a transformational opportunity for businesses in Africa. This is the opportunity for Kenyan-based businesses to look beyond their borders. In order to be able to meet the same performance, geography must not be a barrier any longer for those for whom geography was a barrier. So I would say that we have a momentum here, an opportunity to sort of transform the challenge we're facing with, and actually sort of draw an opportunity for growth and take off for many businesses. It's going to be challenging, but I think it is basically the litmus test of Kenya being a unique business on the continent.
You know, there is so much going on bodies or maybe organizations coming in to help with to ease the pandemic effect. But what will be the ideal commercial response indeed from these bodies trying to mitigate the effects of the COVID-19 pandemic? And how do we achieve a trickle-down effect of the response to the areas in the African economies and maybe smaller businesses that needs it the most?
I think that we probably have to look into what we can have a multiplier effect, so that the Kenyan economy should be, when talking about Kenya, should be in a position to really leverage off every single facility and capital available or coming in the economy. So this is an opportunity for reforms, and I think the central bank has basically taken the task to look into that, and will certainly be regulating or gradually improving measures already taken. But beyond that, I was mentioning a little bit earlier, geographic expansion and looking beyond the existing business models to adapt and grow your business. But I also think that this is the opportunity to sort of making sure that Kenyan stated businesses are able to service the economy at large. When we don't need to look further outside of the country or the continent to service the economy. We should. Many countries are going to be trying to help businesses relocate out of their own territories. So it means that some businesses might leave Kenya or be interested in leaving Kenya to go back to their home countries. So it means that those in our economy who are responsible for attractiveness of Kenya should keep a tight leash on sort of improving the context.
Thank you so much, Mr. Eric Mboma, Group Director of Subsidiaries Africa Guarantee Fund. And that's a good job that you guys are doing. And I hope that maybe economies, SMEs can get to reach you, and you can also get to reach them in an easier way, so that they can get the help that they need to sustain themselves amid this pandemic. Thank you so much, Eric.
Thank you for having me.
That has been Eric Mboma, Group Director of Subsidiaries at Africa Guarantee Fund. They have a facility on board to help SMEs ease themselves during this pandemic. Now, if you'd like to get a glimpse of what we've discussed with Eric Mboma, you can go to our YouTube channel, go to the time we started up to the time where we are right now, and you get a whole recap on what we have discussed or talked about. That's it for Business AM today. My name is Tabitha Muthoni, sitting in for my colleague Simba Charles Kiage, who is having or taking a well-deserved break. That's it for today, and continue enjoying the rest of your programming. Talk to us. Our SMS line is 20146. We are live across our social media platforms at Metropole TV KE, and talk to me as well at Tabitha Muthoni. And that's it for today on Metropole TV KE, your premier business channel across East and Central of Africa. Yes, we have to boast about that, and continue enjoying the rest of your programming, and have a very good morning.